Well, hello everybody. This is Brian Kenny, and I am a Platinum founding member of Now Lifestyle. And in today's lesson, I'm going to speak to you about taxes. I know we've all heard nothing is guaranteed in life except death and taxes. We all know that. So why not learn how to use taxes to your advantage? And in this particular lesson, I am going to show you some tax reduction strategies that you as a network marketer can use in this digital age in which we are living. But first, I want to share a little bit about who I am. Now, I have been 100% self-employed for over 40 years. But for 30 of those years, I have been in the tax preparation and education business. I have owned a tax franchise and a California certified tax school. Now, it's important that you understand all tax schools are not certified. I ran one that was certified. I met all the rigorous tests required by the California Tax Education Council. I designed curriculum that was accredited, a curriculum to help educate both veteran and upcoming tax professionals. So I am qualified to speak about what I'm about to share with you. Now, I have to always give a shout out to my beautiful granddaughter. She loves her papa and papa loves her. That's my heart. She motivates me and keeps me going. All right, so as we get into this, you need to be aware there are many tax strategies for network marketers, independent contractors, and others. But what I'm going to focus on in this training and upcoming trainings are three of the most powerful tax strategies, tax reduction strategies that you as a network marketer can put into practice right away. Those three are: one, the gas rebate, the office and the home, and hiring your children. Now, I may do more than this later on, but these are the three that I'm promising that I will be doing in the upcoming weeks and months. Today, we're going to begin with the gas rebate, which is a special deduction that the IRS gives you for the business use of your car. Justice Learned Hand, who was a Supreme Court justice way back, in the late 1800s, early 1900s, he said there are two systems of taxation in our country, one for the informed and one for the uninformed. The uninformed work harder and longer to pay more in taxes than they do for housing, food, and clothing combined. The informed start businesses, especially home-based businesses. Now, I can go on and on showing you the advantages of having a home-based business, and I may really get more into that in upcoming trainings. The two systems that he's talking about is the W-2 wage earner system and the business owner system. But we're going to show you how to take both of these systems and make them work for you. Because when you can show a wage earner how they can add a home-based business to what they're already doing, you can show them how to make a tremendous savings in taxes and literally fund their business using money from the IRS. Let's be clear about something. America was founded on entrepreneurship. Its very existence is based upon people constantly developing and growing businesses. Look at the state that we're in right now due to coronavirus. The nation has shut down. Businesses are suffering. Consequently, the entire nation is suffering. Many cities are on the verge of going bankrupt because the businesses have been stifled. And right now, the the government is doing everything it can to get businesses back into operation because our existence as a nation depends on businesses being profitable. Consequently, the tax laws favor and encourage business development. Now, the W-2 wage earner system, which we normally call the 9-to-5 JOB, for many, many years and decades was considered to be the American dream. But right now, we all know that it is the American myth. If you think that you can work a 9-to-5 job without adding a home-based business of some sort to what you're doing, and that you're going to be able at some point retire comfortably in today's culture and society, folks, you're not facing reality and your head is buried in the sand. So it's important that you as a network marketer help W-2 wage earners understand and learn what I'm about to share with you. So as we begin to dig into this gas rebate, you need to know something that is very, very important. Because the IRS is going to look at how you take your deductions. And I look at everything from the viewpoint of an audit. So you need to know this very important bit of information. Every deduction, whether it's a gas rebate or otherwise, is only for bona fide business. Now you may think, oh, that's obvious. Folks, like I said, in my 30 plus years as a tax practitioner, I've attended and been involved in numerous audits, and I have seen the IRS literally remove the business status from someone's business because they fail to meet the test of a bona fide business. Now, the IRS has certain criteria, but there's one that is above all others. And you need to know this. And the one that's above all others, the single most important thing that you need to know about being a legitimate business is this word intent. See, you need to have the intent to make a profit. Now, you may think that's obvious, but you'd be surprised why some people start businesses. For instance, there was a company that were teaching individuals about tax strategies. Unfortunately, they began to pull in a lot of people who were beginning to start home-based businesses for the purpose of getting the tax strategy, not for making a profit. And the IRS denied a lot of those, and a lot of those people got in trouble. The intent to make a profit is the most important key to having a legitimate, or as the IRS says, bona fide business. You must be making decisions that a hard-headed businessman would make. And believe it or not, the tax code uses the term hard-headed businessman. Now, you don't have to make a profit, but you better be trying, and you better document the fact that you are doing everything you can to make a profit. Not working longer hours, that's not what I'm talking about, but you're doing things to prove that you're trying to make a profit. Now, there's a myth that if you don't make a profit within your first 3, 4, 5 years, that the IRS will deny you as being a business. No, they won't. That's a myth. They'll deny you if you're not trying to make a profit. But as long as you are doing everything you can to make a profit, it doesn't matter if you make one or not, the IRS will still acknowledge that you are a legitimate business. Therefore, you will qualify for the gas rebate and every other tax deduction out there. So now let's jump into the nitty-gritty of the gas rebate. For 2020, the IRS is giving you 57.5 cents a mile for the business use of your car. So let's kind of look at how valuable this is. What is it worth? Well, if your car is getting 24 miles to a gallon, and I looked up online to see what the average miles to a gallon that a car is getting right now, and 24 was what they came up with. If that's the case, this rebate is worth $13.80 per gallon. The IRS is willing to give you $13.80 per gallon of gas that you use for business. In my research, I also discovered that many hybrid cars are getting somewhere between 44 miles to a gallon. You know, that's the high end. But if that's the case, you can effectively earn $25.30 per gallon for every business mile that you drive. Remember, the more mileage that your car gets per gallon, the more valuable the gas rebate is to you. Also, as I was going through Google, getting this information for this presentation, I discovered that the average cost of gas right now in 2020, July of 2020, is $2.03 per gallon. Now, that can change at any given time, but at this current moment in history, the IRS is giving you a profit of between $10 per gallon to $20+ per gallon of gas that you use for your business. Folks, if you're not taking this deduction, you are throwing away free money. So now we're going to discuss the qualifications, and I'm going to show you how to claim this particular rebate. The one thing that you must understand is the word contemporaneous record. Existing, occurring, or originating during the same time. For tax purposes, it means the records used to support a claim on your tax return were created and originated at the same time as you performed the act, meaning that you need to record the mileage, information, and the business purpose at the time in which you're going to the location. It has to be contemporaneous. There are acceptable records the IRS will take. One is a mileage log. This one the IRS loves because many IRS agents still use mileage logs. The other is an app. We have plenty of apps out there. And still, the old-fashioned appointment book is acceptable. There are compliance issues. The IRS is real heavy on compliance. So let's look at the mileage log option. If you're using that option, every trip that you take, you must record the starting odometer reading in your car and the ending odometer reading in your car, as well as documenting the purpose. The drawback with this is it requires a tremendous amount of discipline. And if you use this record, if you do get involved in the audit, the IRS will not allow any other documentation. That's it. It's a log. It's contemporaneous. No flexibility there. Another way to be in compliance is to use what is called mileage averaging. In other words, you're going to keep the same record diligently for 3 months or more. Then you're going to take the monthly average and multiply times 12, and that is going to be the amount of miles that the IRS will accept for the year. Problem with this, if you drive more miles for the rest of the year than you did in that segment of time that you chose, you're going to lose that extra mileage. But now, at the same token, if you were really good at planning and you knew in advance that for a 3 to 4 month period, you're going to drive really high mileage, this method could be worked to your advantage. One of my favorite methods is dealing with the appointment book or your app. Now, in this one, you're not really recording the odometer reading. You can, but basically what you're recording is the address of where you're going. as well as the purpose. And then at the end of the year, you're going to use something like MapQuest or perhaps some special feature in your app to determine your mileage. Now, this really is the most flexible method when it comes to an audit. I don't really have time to go into that, and even if I did, you'd probably be bored to death. But accept my experience on this, this is the most flexible method. There's one other method, and it's called mileage reconstruction. This, folks, is the worst method of all. But if you don't keep records, it can be done, and it will hold up an audit. And if it holds up an audit, it can really save you a lot of money. I've done it many times. I don't really like doing it, but sometimes it's necessary because a lot of times I'm working with someone that either didn't listen to me or were not trained by me. But I want to warn you, don't use this method without consultation from a tax professional who understands both the audit process and business deductions, because it is very tricky to get this right and to get it accepted in the audit process. Now that we've laid that out, we're going to talk a little bit about tactics and strategy. We know we now are living in a post-COVID digital age. Well, maybe not so post yet. It may still be pre-COVID. We may still be in the COVID age. Okay, but we're getting ready to come out of it anytime soon. But we are in the digital age. We're in a time where people are using things like Facebook, Twitter, Instagram, instead of driving to locations to reach people. And the mileage, especially with the lockdown, is suffering. But I'm going to show you a strategy that you can use to increase your mileage and get more bang for the buck from this gas rebate. Now, for this strategy to work, in fact, for almost any tax strategy to work, the number thing you must be able to document and prove is purpose. This is true for just about any tax deduction. You've got to prove business purpose, and you must make sure that purpose is recorded on whatever method that you choose to record your mileage information on. The next thing you must be able to document and prove is if it is ordinary and necessary for your business. Now, the IRS has a set of rules that you use to determine if a business deduction is ordinary and necessary. And in some of the other lessons, I may get into this, especially when I start talking about the business deductions for your children. Fortunately, there are some things that the IRS pretty much understands as ordinary and necessary for just about all businesses. For instance, if you drive to your bank to make a deposit for your business, that is a business purpose. Maybe you have your business in your home. As you notice, my business is here in my home. I'm speaking to you from my home office. But you could have a P.O. box where your business mail goes to. Therefore, the miles that you drive from your home to your P.O. box and back are business miles. Meeting clients, pretty much standard. Going to opportunity meetings and conference meetings, going to Home Depot, Office Depot, all of these the IRS recognizes as things that pretty much every business must do. They also recognize that you have to promote your business. And this is where I'm going to show you some neat little things that can help you increase your mileage. So pay close attention to what I'm about to share with you. Remember, promoting your business is ordinary and necessary for just about every type of business there is. Promoting your business means using such things as business cards, postcards, flyers. I know this is old school, and many of you have probably heard me say old school is dead. But bear with me. I'm going to show you an instance. I'm going to show you that in this situation, old school ain't dead, and it's really good. Now consider, if you go to things like your barber shop, a mechanic, hairdresser, coffee shop, breakfast, grocery shopping, we all know those are not things that we do for business. Those are personal use items. And the mileage going to these places is non-deductible. Or is it? Can going to these places be for a business purpose? If I can show you how to do that, folks, I can show you a way to increase your mileage dramatically. So pay close attention, because I'm about to actually show you how. Now, I'm going to assume you have a business plan. If you don't, you need one. A business plan is one of those little things the IRS looks at to see if you are a legitimate business. And a business plan does not have to be long. It could be one page. It could be multiple pages. Okay? It doesn't really matter. You just need to have an outline of how you're going to conduct business. Part of your business plan is how you're going to market. Some people call it a marketing plan. And in this case, you want your marketing plan to be, or part of your marketing plan is that you're going to take things like postcards, business cards, flyers, and you're going to distribute them and place them in high traffic areas. That's your business plan. Well, guess what, folks? All of these places are high traffic business areas. Let that sink in for a minute. Let me share with you some things that I used to do faithfully every single day. I carried in my car business cards, thumbtacks, tape, flyers, and postcards. Well, I call them marketing cards, but they were really postcards. And if I went to the grocery store, I didn't go to the grocery store and start shopping. I take some time and pass out business cards first. When I was finished, and I may take 5 minutes, 10 minutes, sometimes I'll take longer depending on my mood. After I finished, I would then go do my shopping. When I would go to my barber, she had a counter, and on that counter, she allowed her customers to put their business cards, their flyers, etc. So I would make it a point to come in, and I always would put my business cards, and sometimes the counter would be a mess. I'd straighten it up. After I'd finished, I'd take my seat and get my hair done. I did this at donut shops. I did this at my car dealer, my car auto mechanic shop where I went to get my car fixed. I did it with my dentist. I did it everywhere because always there was some place where I could either post a card on the bulletin board, car washes especially. And I did this, and in my appointment book, guess what? I put down that I went to a high traffic area for the business purpose of promoting my business. Folks, you can do that too. You see, the issue here is not that you went shopping, but the reason you went there is your intent. If your intent is to go there to promote your business, then that's a tax deductible event. So never, people, never go to the grocery store to buy groceries. Never go to the barber shop or hair salon to get your hair done. Don't go to the dentist for dental work. Do all those things on your break. In your appointment book, when you put down your information, okay, you're going for the purpose of promoting your business. Record that you went to promote your business at high traffic locations. Put the address, put the purposes, business promotion. You can even put down that you passed out flyers or that you handed out business cards or you spoke to people. You don't even have to do that, but you may want to. It's up to you. If you can add an additional 15,000 to 25,000 business miles a year, folks, you are in effect getting a rebate of between $8,000 and $14,000 that you can use to reduce your taxable income. And I'm not just picking the 15,000 to 25,000 arbitrarily. These are actual real numbers that I used to achieve, my clients used to achieve. I admit I had some extra little strategies, but you know, if you do this every single day, I even had bank lobbies that will allow me, you know where people have their ATMs, that allow me to put business cards there. You know, you just ask, you never know what they're going to say. You do this, you'd be surprised at the extra mileage that you could rack up each and every year for business. Look, a single person earning $95,000 per year would owe $13,700 in taxes. Now, you know, you may not realize that they paid it because they're taking out withholding, but the truth is, whether they took the withholding or not, $13,700 in taxes is what a person single is going to be paying this year in taxes. If you took this rebate and you got $8,700, not adding any other deduction to it, that will reduce your taxes owed to $11,800. That's a $900 real world, real cash savings in your pocket every year. If you can increase it, okay, by $14,500, not including any other deduction, that will reduce your taxes to $10,500. Folks, that's a $3,200 savings, real money in your pocket. See how powerful this is? Let's say that you initially began investing $400 a month in your business, and incidentally, through redoing your W-4s, you can literally get this money on your next paycheck. But we'll discuss that in future trainings. But if you spent $400 a month on your home-based business, that's $4,800 per year. That $4,800 is all tax deductible too, so you would add it to your gas rebate, reducing your taxes in this scenario from $13,500 to $19,300, saving you anywhere between $3,400 plus $3,000 to $4,000 plus every single year. Your tax deductions can literally pay for your business. In effect, the IRS can pay for your business if you work smart and take the deductions that you are owed. A hard-headed businessman is going to do everything he can to pay as little taxes as he can, and believe it or not, the effort to pay as little taxes as you can is a test to see if you are really trying to make a profit, because the less taxes you pay, the more profit you're making. So now I want to share a tip. You want to find W-2 wage earners who are paying a lot of taxes. And you want to show them how, by starting your business, your home-based business, they can literally allow the IRS to pay for it. Let that sink in. If you focus on W-2 wage earners, let me say that again, who are paying high taxes, if you show them what I just showed you, and subsequent trainings that I'm going to show you, you will show them a way of being able to ensure financial freedom on the IRS's dime. That's powerful, people. Okay, I hope you understand the power of what I'm showing you. If you can help a W-2 wage earner start a home-based business, you will be helping that person immensely. In fact, I almost feel like you have an obligation to share this information with every W-2 wage earner that you run across. I really hope this information was helpful. As I stated, I'm going to be showing you in the future a couple of more deductions: the office and the home, hiring your children. I may do some more advanced strategies. More than likely, I'll have a friend of mine who is also an expert in the home office deduction arena. I'll probably interview her, do a presentation with her, or a couple of the friends that I have. But get this information into the hands of your team and make sure they get this information to every W-2 wage earner out there. I promise you it will help build your business. Now, if you want to stay informed about further training that I'm doing, there will be a link somewhere, maybe to the side or to the bottom. If you want to know more about Now Lifestyle, which is the company that I am really dedicated to as far as my home-based business is concerned, there will also be a link there just in case you want to know some more about that. I'm also a part of an organization that sells nutritional products. We're called Now Body, and I will be putting information about that in the near future. I highly urge you to join my Facebook group. There I will keep you informed about other training that I'm doing. There I will answer questions if you have any. So once again, to the side, maybe on the bottom, there will be a link to where you can join my Facebook group. It's been a pleasure sharing this information with you. Maybe some of you will join my team and we'll have the good fortune of building a highly profitable network marketing business together. Be blessed. Bye-bye. This is Brian Kinney signing off.